Hello, everybody, and thank you for being with us. My name is Luciano Pracidelli. I am a managing director. I head the fintech investment banking for Citi, and we are going to talk with Fernando Miranda today. He is the CEO of Easynvest, and we are going to discuss the future of personal investments and behavior changes, as well as challenges and opportunities post-COVID. Fernando, thank you for joining us here today.
Thank you, Luciano. Thanks for inviting me. It's always good to return to the bank that I started my career many years ago, but it's an honor to be here to discuss a little bit of the trends on the consumer investment finance.
Great. So Fernando, why don't you start by telling us a little bit about Easynvest?
Yeah, that's a good question because not many people know, but Easynvest started over 50 years ago. So it started as a original brokerage focused on institutional. But in 2014, 2015, the company reinvented completely to become the fintech that it is today. We're now over 21 billion reais in AUC. We have around 1.2, 1.3 million customers. And as a sense of the business, we are a full digital online investment platform. In fact, we are the biggest independent online investment platform in Brazil. And our business model is having all the necessary products that the typical Brazilian need for investment. So we're very heavy in fixed income. So we offer all the mid-size banks time deposits. We offer debentures. We're also very heavy on Tesouro Direto, so it's treasury bills, basically. So we started some years ago. We are leader in that space with 25% market share. We offer the regular mutual funds, and we're also growing a lot on the traditional equity, on buying and selling equities on that. And we are based on two pillars. One is full-size technology. So for example, we are around 65% of the entire Easynvest employees focus on technology, providing machine learning, personalization, and content and financial education. So we have an arm of financial education called Invest News that I'm going to talk a little about that. And based on that, we help the traditional Brazilian to navigate what we call in our purpose to awaken the Brazilian for the investments and provide them financial educations so they are self-learning and act in investing.
Oh, that's fantastic. So you said you have 1.2, 1.3 million clients, and that it's fully digital, right? So how do you? It's interesting. How do you to recommend investments to clients given the nature of the fully digital platform?
Yeah, that's a great question. Also, some people ask me, what is the difference with other brokerage firms? What is the difference between the banks and us? So we do not have the bank manager. We do not have the advisor. So of course, we have the regular support on telephone, but we don't need the human interaction to propose it. We have two types of customers. One is what we call hands-on and hands-off. So what is the difference between them? As I mentioned, we focus and we invest a lot in technology to provide the hands-on, the type of customer that wants to invest by himself or herself, all the necessary and the easiness to do so. So when you enter in the platform, it's as simple as one click buy. You have all the major products. We have information. We have ratings. We have basically tools for simulators, profitability. So you, as a hands-on, invest by yourself. And then we have the type of hands-off type of customer that said, I don't want to learn about it. I don't want to do it myself. So we use technology to try to understand what Luciano needs, what is the risk appetite for Luciano, what is the goals of Luciano's, and based on, again, machine learning recommendation, what I call digital curator, I propose and I offer you a set of products that could be fixed income, could be variable income, could be equity, could be mutual funds, could be short terms, could be long term. So we try to tailor for you without the necessary of a human touch. And that's the beauty, because as we're going to discuss a little bit, in order for you to grow 1 million customer, 2 million customer, you need to be able to have scalability, and you need to use technology to grow that and serve well without needing to hire 2 buildings of advisors to help.
No, clear. And what is who is your client? I mean, what are the characteristics of your client?
Yeah, I would say that it's a typical Brazilian. So we have an average of 40,000 reais investment per customer. It is when you go to demographic, it's a bit younger. So the average, it's around 34 years old. As a digital platform, these customers are very digital savvy. So they're going to YouTube, they're going to digital marketing to look for information. So they're coming for that. They are spread out Brazil. So in general, it looks the same as the GDP population concentration. So a bit more in São Paulo, Rio, and the South. But basically, we have customers all over the country. And I think that's the difference when you compare to, let's say, a more upscale wealth management type of platform. So that's the typical Brazilian that is starting to learn how to invest. So some people ask me, okay, where is the customer on Easynvest stage of development? Usually these customers come from the banks. Usually they're coming from the poupança, from the savings account, that they are there, and they start to look to better alternatives. So Easynvest many times are the first place where they start to navigate. And that's the concept of the purpose of the company, of empowers and enables you to navigate and awaken you to invest.
So is it fair to assume that many customers have their first, I'd say, off traditional bank investment experience with Easynvest?
Definitely. And again, that's why the structure of financial education and content is so heavy in Easynvest. We invest a lot there in order to provide the customers financial education, right? I think that a little bit of my digestion here, I think financial education is one of the biggest problems in Brazil, right? We have disregarding income distribution, but literally a lot of the Brazilians do not want to get more involved in financial education, understand a little bit more. And I think that is changing as we go by the year. So yes, a lot of the customers they're the first place to invest. They usually in the past start with more, let's say, low risk type of product. So Tesouro Direto, the Brazilian treasury bill, has been for years, let's say, the ambassador product. And that's why 3-4 years ago, we were the first one to introduce. We are the leader today with 25% market share. And as it goes to the platform, the customers start to get a little bit more knowledge, and then it goes to the fixed income, mutual funds, equity. But that mix is changing right now, and I'm going to talk a little bit about later.
Yeah. So do you think that there has been a democratization of the Brazilian personal investment in space?
I think, Luciano, that's a start. I would say yes, but I think we are in the beginning of a massive transformation and the customer behavior when it touches to investment. So I think that we started as Brazil to democratize investments, but we're not even in the beginning. And I think there are 4 or 5 major reasons why this is changing. The first one is what you call the Selic rate, right? The Brazilian government rate, which used for many years to be double digits, 10%, 14%. There was a moment of 15%. Today is 3%. So when you have Selic rate of 15%, why would you bother shopping around, looking around? You basically leave your money on the poupança, on savings account, or any regular 80% of Selic, 90% of Selic, and that's okay. When the Selic rate is at 3%, if you don't do that, if you leave your money on savings account, your real interest rate is negative. So you need to shop around, That's the first and maybe the most important structural change. The second one is technology. Some years ago, for you to open an account on Easynvest, on any other platform, even banks, it's paper, it's 2 days, and there are a little bit of hassle for you to open an account. Today, if you open now, when we are in this live, in 8 minutes, from the moment that you start typing your name to the moment that the technology will say, congratulations, you have an open account, it takes 8 minutes. So 8 minutes, fully digital, so the barrier of entrance becomes almost nothing. The third point is what I mentioned about content and education. So it started to have a lot, and here internet, YouTube, influencers made a very important role to start to bring this topic to the Brazilians. So as of now, investments as a topic is by far the highest growth rate of topics being rated on Google. So a lot of people are Googling investments, equity, and this. So they need financial education, they need content, they need the lessons to get a little bit more aspect. And the fourth point is what I believe that the COVID and the pandemic crisis is bringing. I think that the crisis has all the negative aspects that we know, but there's one aspect here is that I think is changing the behavior of Brazilians for the need to save money, for the need for a emergency reserve. And as we both Brazilians know that we are very consumer addicted. We don't believe in the savings for later. Well, I'm gonna use that right now. And throughout the crisis, throughout the need for shopping around, you start to understand that you need to look for alternatives. You need to have a reserve, emergency reserve. So all these 4 pillars, for me, has a structural change that is already changing and bringing a lot of new customers to those platforms. But I believe that this will change completely. Just for you to understand, the last 2 years, we've been growing over 50% in all metrics that you can think about. Customers, AUC, and so on. And that's, of course, part of all the investments that we've done and the new products, but a lot based on the consumer change that is looking for good alternatives to put their money. And equity is one aspect that I can talk a little bit about, which is also transformational.
I was going to ask you about that. So you mentioned that because of the low Selic rate, people are moving into higher, returns investments, seeking for yield. So how many people have moved from fixed income to to equities, to equity link, to multimercado, over the last few months or couple of years?
I think first, even though Selic is at 3%, there is still a lot of very good fixed income products. But you need to look around. You need to really, you can't just stay in whatever bank you are and just stand still. You need to find alternatives. So you have fixed income products with 5, 6, 7% annual rate with relative low risk. So, and that's the beauty of diversification. But when you go to equities, there are some numbers that for me is really shocking. You know that in end of 2018, mid-2018, there were 700,000 Brazilians investing in stocks. Remember that we are a 200 million population, around 100 million active economic population. So 700,000 people invest in equity, 0.7%. Between end 2018 to beginning 2020, Brazil grew by 2 million people. So today, there are 2.3, 2.4 million Brazilians investing. So one aspect, a lot, huge growth. Second point, during the crisis, between mid-March and April, May, in the moment, the biggest, deepest crisis in the history, 400,000 new Brazilians came to equities. And that's a major change. There's also a change in demographics. In the past, it was more the savvy, 60-year plus type of person. So around 50-something% of the people investing in Bolsa and the equities were 60 plus, around 20% between 25 and 40 years. Right now is the opposite. It's 50-something% between 25 and 40 years old, and 20% over 60. The high income has also changed. So usually a lot of money in the beginning. Now there are hundreds of thousands of Brazilians that enter in the equity with a 500 reais, 600 reais. So it has changed a lot. But even though that growth is really high, when you compare to other economies, that's nothing, right? Even so, when you talk about 2.4 million Brazilians, from 800, it's a lot, but it's 2% of the active economic population. When you go to the US, there are 54% of Americans trading. So it's 100 and something million reais. When you go to UK, the same. When you go to similar economies, Mexico, Chile, it's over 20. So I believe that these 2 million would easily go to 10 million in the next 3-4 years. And still, we're talking about 8 to 10%. So it's, for me, those structural change has a major structural behavior change for the Brazilians in general. And then the last, I think, point on this, which I think is very important, I've seen in Easynvest the first products when they come, right? In the beginning, a big portion of the customers were coming as the Tesouro Direto, as the major product, right? The first product. And then you go to today, the major product is equity. So customers coming, and again, sometimes it's 200 reais to invest, because they start to understand that invest in equity is not only for the rich. You know, I did a survey some months ago in general, and there were, still there are, but less, there were a myth that equity is for the rich. Equity is, you need to have 5, 10, 20,000 reais to invest. Then when people start to understand that with technically 100 reais you can invest, it starts to change the mentality.
No, interesting. It's interesting that you said that, you know, the number of people investing in equities went from 700,000 people to, you know, roughly 2.5 million people, right? And I assume that many of these new retail investors came to buy equities when the market was booming and people were making a lot of money, you know, month after month. But, you know, as you said, we are going through one of the biggest crises in Brazilian history. And I think that many people lost money for the first time in their lives, right? So how was that effect in your clients? You know, how did people react? You know, especially given the nature of, you know, your digital platform, right? If people don't have someone to talk to, you know, how you handled how was the, you know, withdrawal movement, if you can comment on that. And then, you know, as you mentioned, when people after, you know, February, March, reignited their equity investments.
Yeah, that's a great question. And I think that for a lot of these new customers, new Brazilians invest, it was indeed the first big loss. It's not going to be the last, not for sure. But I think definitely it shaked a lot of people. I mean, a lot of us, right? Not only how much the market went down, but how deep went down and how many times it went down. But to be honest, I mean, you don't need to call a customer service, to call an advisor, to call your branch manager to talk about that. And so we increased a lot the communication to our customers throughout all the tools that we have. So we have an army of analysts, of specialized persons would provide information for the customer. So, and on that moment, we increased a lot information for them. In other words, to say, you know what, take it easy. That's not moment to panic. That's not moment for you to remove. That's the moment to stay. Those are the sectors that we believe that they are best positioned. Those are the sectors that we are a little bit aware. And so, again, through communication, through technology, we put a lot of the information on that. Of course, there are some Q&A. The customer can always go to our advisor by telephone, but that is not meant to be on that. So there were a withdrawal of investment, especially in the mutual funds on variable income, but not much on the equity side. The equity size, a lot of the people increase their let's say their bet. And as I mentioned, the Brazil in January increased by 400,000 new Brazilians investing throughout the crisis. We increased by 35% the number of new customers we used to bring per month during the crisis. So they understood that there is a dip, this is going up. They understood that sometimes that's the opportunity. So to be honest, I think that more important and is to bring information out going forward. Because I think now it's becoming tricky where there are companies that will be the winners and there are companies that will not be the winners. And I think that's where the stock exchange will start to differentiate themselves. And to summarize that, for me was the general customer reaction was much better than anticipated when you see the materiality of this crisis, right? And I think maybe, again, technology, working, talking to different specialists, and what a lot of information that we have in the media, in the news, and throughout our internal channels, that maybe in 2008 crisis, in 2007 crisis, in 1997 crisis, we didn't have that. So maybe that previous crisis, they were kind of orphans. Where should I seek for information? The only information that I would have would be calling my advisor.
So do you think that the investor behavior has changed already, post the crisis?
I think it is a process. I think to change a behavior that has been that for years, and I think that behavior is not only an investment. I think it's the Brazilian behavior of taking risks. That's the Brazilian behavior of the relation between consumption and savings or investment. So it's an inherited cultural aspect that they are very different in Asia, very different in Europe, right? And not better or worse, but they're very different. So I think that over the last years, we started this behavioral change. And I believe that this is structural change, that there's no comeback. I don't think that 4 or 5 years from now, if the Selic rate is 7, 8, people start to move back and to put their money on the savings and not looking around. Or no, I'm very strong believer that there's no return anymore. But as I said, I think that is as we go, there is a change that comes, and it takes years, right? As I mentioned, some of the information, the relation investment AUM to GDP in Brazil is nothing compared to the world. As I mentioned, the 2 million out of 100 is nothing. So there's a lot to be changing. There's an also interesting statistics. The relation between investment platforms like Easynvest and others, and banks. Today in Brazil, roughly 9 to 10% of all amount invested are on platforms. 90% in the banks. That is changing from 7, 8, 9, changing fast, but it's still 10. We believe that in 3, 4 years, that goes to 25%. So the investment platform market will almost triple, but it's still low, 25%. When you go to US, 87% of the trillions dollars invested there, it's on online investment platforms such as Charles Schwab, right? When you go to UK, it's the same. When you go to Mexico and Chile, it's the same. So a lot of those things are happening where the macroeconomic fundamentals, the technology, and the behavior change are looking around that will shape for that.
Yeah, so you mentioned a lot about the Selic rate, and a question that we got is if the Selic rate is the main driver for changing investor behavior, and if you think that the continued period of lower rates will be the engine for continuation of the movement, out of bank cities.
Great question. I think that the lowering Selic rate has materialized that change. The reason I'm saying is that even before the Selic at 3, when the Selic was 9, 10, there were also growth on the market. As I mentioned, Easynvest was growing 30, 40%. But I think right now, or let's say the last 12 months, right? The combination of low Selic, advanced technology, a lot of education, news around, content, financial information, these things materialize the change that there's no point back. So that's why I believe that the Selic rate will continue to be low for a period, but even after some years, when it comes back to 6, 7%, it will never come back again. So the Selic was really important to, again, materialize that profound change that now is into a different level for that.
And we're talking a lot about equities, right? I mean, are there products that you have launched that basically package different types of equity instruments, mutual funds, or have you launched new products post-COVID, things to minimize volatility? If you can talk about about products for the retail investors, that would be interesting.
Yeah, that's a good question, and I'm going to give you an example on a new platform that we launched in September to buy and sell equities, less to the trader, right, the swing trader, and more to what we call buy and hold. Typical customer like us, or customer that is starting their way, that buy here, sell later. What we learned in the past, home brokers is complicated. It's very difficult if you are not really savvy and experienced to enter into the market. A lot of numbers, graphs, you don't know how much you're paying. It is like something that you are afraid of. So we learned a lot, the pains of the consumer. It took us, let's say, almost 9 months to a year to build a totally different way of investing, which is almost like e-commerce. So when you enter in the platform and when you buy or sell a stock, it's almost like going to Magazine Luiza and buying a TV. So you have the heart to make it favorite. When you're gonna, for example, buy a stock, one typical thing that the market will do is, okay, you're gonna put the stock of Petrobras at 20 reais. And then when you go, it is not 20, it's 21, it's 19, so you never know. For the customers, I don't know, I want to buy Petrobras and I have 1,000 reais. Tell me the best price. So we did a lot of usability, a lot of what we call UX, to make like an e-commerce with recommended portfolio. If you like dividends, there is a portfolio for the companies that pays better dividends. So almost like Netflix. So people that bought that, seen that, have that. So you start to look around. And based on that, we had a dramatic growth. We moved from around 60,000 customers investing in the platform before that to over 200, 250,000 in the last 2-3 months. So yes, the wave of consumers coming in, but I think that the main point is you need to understand the way of thinking of the typical consumer, not the savvy, not the one that has been 10 years trying, the understanding, but someone that has never entered into the financial platform, but has been reading, or buying things on Amazon, listening to music on Spotify, buying something on Magazine Luiza, he or she has a mindset of, okay, this favorite, I have that. So you need to try to reinvent your product towards what he or she is accustomed to, and that's what we did. And that's a little bit of our DNA, to always try to be innovative into the online brokerage market. And I think that is the last question on are you developing new products during and post-COVID? There are two main aspects. One is still, let's say, classified, but we've been putting a lot of efforts on capital markets, even though the capital markets is still, let's say, regularly closed today. But there's still some interesting opportunities. So we were very selected to bring to our platform good debentures, good real estate debts to the platform. And we are about to launch in about 20 days is attached to investment, a very important product to the Brazilians that I can't unfortunately open right now, but it's something that we've been thinking a lot. And throughout the need for the Brazilian, throughout the crisis, we said, well, that's the moment to put additional products for them in that difficult moment.
Oh, great. So you mentioned a couple of interesting things, right? You almost like created a playlist, right? So you choose what, rhythm you like, dividends, growth, yield. So this is very interesting. It's all about user experience, it looks like. And, these Brazilians are very digitally savvy, right? I mean, we see that they're at the forefront, right? I mean, despite, the change that we see now, like you and I talking our homes in T-shirts, what else is here to stay in this new normal? And when you look at you mentioned only 10% of the investors are out of the big banks and into the platforms such as Easynvest. So, what is the limit? What is the trend? What do we expect? People will do, and how many will migrate into digital platforms?
Well, it's hard to put a ceiling. Honestly, I think that, as I said, we are in the middle of a massive transformation, really disruption. Any number that I put will be outdated. So I really think that there's no ceiling for that. But as you mentioned, well, we are here talking. Like the other day, I was talking to a friend of mine that's working with education, and he said that roughly you need around 200,000 teachers to support the public education system. Amazonia, Rio Grande do Sul, São Paulo. Now, going forward, of course, it's still, we don't know what's going to happen right in the future, but can you imagine that you can actually, with much less complexity and much less people, you can give a nice education course, the same that you do in São Paulo, to Manaus. So it's major change, right? I was talking to some digital guys, one major CEO of a public marketplace company. And he said that throughout this crisis, let's say throughout 2020, he believes that the digital transformation in the companies in general has accelerated or will accelerate by 10 years. So it's something that is absurd, because prior to that, as you know, you had the digitalization, some more marketplace, we have the investment platform. So, but in general, there are still a lot of companies fully analogic. And I think that in very short term, the digitalization became a survival thing, right? So I don't think it's totally crazy to think that anticipated 10 years the digitalization. But what I believe that is, I think going forward, and a lot of people ask me, okay, what is the stock market going through? And this is a new bubble, what's going to happen? I'm very bold, I'm very positive about, but I think that going forward, we'll see a major differentiation between the winners and the losers. And I don't know, right, who will be them. But what I see right now is I saw a panic where, disregarding which company was, everyone down. Then, disregarding how you are, everyone up. I think now we will continue growing stock market, but again, separating good companies, and sometimes not only good financial companies, but companies that are more or less adapted to this new world, right?
Right. No, that's very true. So how do you see, what are your views or Easynvest views as to Brazil, to capital markets, to macro, GDP?
I think first I want to talk a little bit about investments. I see that the market going forward, as I mentioned, will continue the products that we talked about, right? Equities will continue to grow, fixed income will continue to grow. I think pension funds is something that nobody talks about, and I think that will grow a lot as well. Many people don't understand pension funds and believe that pension fund is only for retirement, right? The retirement plan, and not, right? Pension fund has different advantage. There are tax advantages. There are many advantages. So people start to understand more. I think ETFs, right, on the stock market. If I'm not wrong, Brazil has around 20 or something ETFs. We are in the beginning of this. I think that will grow, and more banks and asset managers will start putting and develop their ETFs. I'm very positive on real estate. So fees, right? Real estate investments, I think will grow a lot. I'm very also bold on the Brazilian capital market, right? Because when the Selic rate is low, you open a window for mid-sized companies to go and issue debt through Brazilian capital markets. As opposed in the beginning, with the Selic too high, if you go here, it's still very expensive. So after, let's say, the crisis, you start to see a window of a warming up of the Brazilian capital market. And I see the ventures, CRIs, right, the retail real estate type of investment, which is tax exempt. You see CRA, which is more agricultural tax exempt. So a lot of different asset products on the capital market will become, let's say, more normal to the Brazilian market, and of course, consequently to the Brazilians as a way of diversifying of the asset. So I think that it start to have, okay, it's not only bolsa, right? It's not only equity. You start to understand a little bit more that the beautiful is diversification, right? When you ask me about what is going to happen with GDP and interest rate, I mean, it's, whoever knows
Who knows?
is the hero, right? So I don't have a crystal ball. My personal belief that is we're gonna have a rough second semester. We're gonna have a rough first quarter. That's Fernando's view, not Easynvest. And then by the second quarter of 2021, assuming that political aspect is not difficulting yet, then you start to have a high growth, a shape, high vertical growth of, because a lot of the demand will be stuck, waiting for like a light at the end of the tunnel, waiting for a good sign of positivism. And then, let's say, between February and March, then go. Poof. That's my view. Interest rates, I think, will be low for the short and mid term. I don't think will change. It's not going to increase status quo or assuming that no major change happening in the near future. Right? Next 2, 3, 4, 5 years, I don't know, but I think that's a little bit more. But in general, Luciano, I'm very positive, I think, right? And again, tough moment, rough second semester. But I think that the crisis will not in Brazil, let's say, deteriorate dramatically the structure of our economy. Yes, will put a lot of burden and will destroy, unfortunately, a lot of segments. But I think the essence of that, and that's why I believe when things start to be good again, when the light becomes in the beginning of next year, I think that we will have a high growth GDP again, and you have all this optimism coming, which was what we had, let's say, in the beginning of the year, after the pension bill has been passed and before the COVID.
No, it's great, and I think that ally to all that we talked about, because we focused a lot on equities, but you mentioned rightfully real estate, corporate debt, all of the funds flowing from individual savings into all of these different debt and equity instruments in the Brazilian market will in the end benefit the whole capital markets of the country, right? And that's a benign, a virtual cycle for the economy.
Exactly, and I think that's my theory is that today we have a massive amount of liquidity in the market driven by the governments, right? Brazilian government, US government, all over the world putting billions, trillions of dollars on the market and liquidity to try to mitigate the price. But the difficulty is that how that liquidity is reaching the real economy, right? And that's why you have GDP going down. I think that with all the instruments that we talked, with the capital market being more fluid, as you mentioned, putting, mid-sized company issuing debt, this issuing debt, putting the money, this debt to the investor, this investor buy it, and that retrofeed the economy. That for me is the best type of market liquidity, because you feed the economy, the money flows, but in the real economy. Mid-sized companies with the money to invest in real projects, customers investing, make money, consuming, and that is, let's say, what I call a good virtual cycle of the economy.
So that's fantastic, Fernando. I think I think we covered it all for this afternoon. I don't know if you have any final remarks that you'd like to mention.
No, I think first, thank you for that, and that's the moment that we are all together on this crisis. We reached the bottom, but as I mentioned, I'm optimist, and with hard work, we're all gonna go through it, and I'm positive that we will have a positive future ahead with a lot of learnings as the economy and society coming out of that. Thank you.
Couldn't agree with you more. Thank you, Fernando. Thank you, everybody, for joining us this afternoon.
Thank you.